Hello everybody, welcome back to another valuation investing video, and today in this video I'm be going over Micron Technology because they have their earnings coming up on Tuesday just in a few days. So I want to go over Micron stock and go over what to expect for their upcoming earnings and to see if we should be buying the stock right before their earnings report. But taking a look at Micron stock, as we can see here, we can see the stock is up 86% year to date. So I think this is one of the best performing stocks in the S&P 500 year to date. So this stock has just been rallying like a lot, and as we can see as of late, it's really been doing good. So with that being said, let's go into their earnings report and see what to expect for their upcoming earnings and to see if we should be buying the stock today. So let's go over to the earnings expectations for Micron. First, let's look at the earnings per share. Analysts expect them to report about $2.87, which would represent a significant increase of over 140% compared to the same quarter last year. So that is very good growth. Also, some estimates are even higher at $2.96. So this is expecting huge growth with Micron due to the huge increase in AI demand for their chips. Also, for the revenue, we can see consensus revenue forecast is approximately $11.1 billion, which would be over 40% year over year growth. So the company's own guidance for this quarter is 10.7 billion, but the consensus is a lot higher than what the company has forecasted. So it seems that AI is really catapulting Micron's growth for the future, and that's why the stock is doing extremely well. Taking a look here, this is some things I would say we should look at in this upcoming earnings. I think one of the main things is the high bandwidth memory commentary. HBM is one of the core Micron's AI stories, and this report would significantly help Micron in the future to see how their AI is doing. So we want to take a look at that revenue growth. Also, we want to take a look at the market share. How is Micron's HBM market share tracking against competitors like Hynix and Samsung? The company previously stated that they're aiming for HBM market share, so that's really good. HBM4 update, we want to see updates on these high bandwidth memory. So this is the main component of Micron's AI story. So we really want to see how that's going to be playing out for the future and how it did this earnings. Also, taking a look at some other things, we want to take a look at the DRAM and NAND pricing and demand trends. While HBM, like I said, gets most attention, the health of the broader memory market is still vital for Micron going forward. So we want to take a look at the DRAM pricing. The recent surge in Micron stock has been supported by improving DRAM pricing. So if this continues to trend higher, this will really help Micron even further. Also, we want to see the NAND market. The NAND flash market has been slower to recover than DRAM. So if we can see signs of turnaround, this will be good for Micron. Also, we want to look at the CapEx spending because a lot of these AI companies have been spending a lot. So we want to see how this is going to be playing out for the future with Micron's CapEx plans. We want to see investment in HBM capacity and technology transitions. So taking a look at the main reason for why Micron has been doing very good over the past year, obviously the AI boom and high bandwidth memory demand. The single most significant driver is the explosive growth of AI. AI infrastructure, particularly for generative AI and large language models, requires high performance memories to operate at scale. Micron is a key player in this space with HBM products. So this is very good for Micron, and we want to see this continuing to drive Micron's growth. Also, taking a look at the strong position in the AI supply chain, Micron is a crucial supplier for major AI platforms, including NVIDIA's Blackwell and AMD's Instinct series GPUs. So these are big for Micron, and we want to see how well they're supplying these NVIDIA and AMD for their supply chain, and we want to see the demand from NVIDIA and AMD increasing. And as we can see, this is why the stock is doing good because of that increase. So also we want to see the rising memory content per AI system and improved market conditions and pricing. So with that being said, I'm going to be taking a look at what I expect for September 23rd, which is their earnings date. So this is what I expect from Micron. I honestly believe we'll see a beat on both revenue and earnings. I'm going to be pretty bullish here. I think they're going to hit $11.3 billion in revenue. And for the earnings per share, they expected about anywhere from 280 to 290 plus. I honestly think we're going to see probably Let's do 295. I think they're going to get to 295. I think Micron's going to have a very good quarter. I think they're going to also raise their guidance for the future. I think the growth is really continuing. AI spending on Micron just continues to grow at a very fast rate, and that's why I think also AI growth will continue. So with that being said, let's go over to my 7-step stock analysis to take a look at the financial health of Micron. So taking a look at my valuation investing stock analysis platform, if you guys want to go check this out, go down below, hit my Patreon membership. You get a 7-day free trial if you want to try this out. I think this is definitely worth it, but let's get into Micron stock. So the first thing I'm going to look at is the stock analysis. So let's go over to the stock analysis. Let's go here and type in Micron stock. So let's type in Micron. Now let's go down over to the financial statements and 7-step stock analysis. Taking at the 7-step stock analysis, as we can see, we get 4 out of the 7 key metrics. First, the forward PE ratio is insanely low at 12.64. So Micron's looking like it's trading at a pretty cheap valuation. However, the return on invested capital isn't looking good over the past 5 years at 1.1%. So it doesn't seem that they're very good at reinvesting back into the business. But to be fair, I think this doesn't really take into account because back a few years ago, they really had a decline in earnings. And if I remember correctly, they actually had negative earnings. Let's go over to the charts and let's go to the financial history charts. Yes, as you can see here, like I said, they actually had negative net income just a few years ago. So this will be over exaggerating the earnings a little bit. So as we can see here, the earnings did go negative. So that is going to be hurting them with this 7-step stock analysis slightly. So keep that in mind with the return on invested capital and also the EPS growth, but revenue growth is still decent, 7.7%. Also, EPS growth, like we said, it is slightly a little bit exaggerated due to that big decrease back in 2023 at a negative 2% growth. So face value, it doesn't look good, but I think the future is looking pretty good. Also, shares outstanding decreasing, value of negative 0.3%. So they're buying back shares slightly, but not by a lot. Debt to free cash flow, I think this one's also a little bit over exaggerated. We can go over to the financial statement and let's go to the free cash flow. Yeah, as we can see here, once again, this is exaggerated because their free cash flow is barely positive because of huge capital expenditures. It's kind of exaggerating how much debt that they really have. Take a look at the total debt. 14 billion, but net debt only 4 billion. When they're making, let's see the net income, total revenue we can see here, and taking a look at the net income, we can see $778 million in net income. So taking that into account, it's not too bad, but in the past it was at almost 8 billion. So honestly, the debt is not too bad, even though this does show the debt's bad at 13.3. That means with their recent free cash flow, it's going to take them 13 years, but I expect that to definitely be a lot better in the future. Also, the future EPS growth rate is also once again over exaggerated at 460% due to the huge decline in earnings per share in that past quarter, as we can go over here in the past year in 2023. I mean, as we can see here, as they're barely profitable, analysts do expect them to get back to this level of profitability back in basically 2020 and 2022. So they're expecting huge growth to return back to that profitability. So it makes sense for that huge growth, but do I think it's going to necessarily do that? It's definitely going to decelerate as the years go on. So honestly, face value, this looks pretty bad. Honestly, 4 out of the 7. But I think if you dig deeper into the company, it doesn't look too bad for the future also. So with that being said, now let's go to my intrinsic value calculator to get a fair value price for Micron stock. So with that being said, let's put in my assumptions for Micron. First, let's take a look at the revenue estimates. As we can see here, if we take a look here, the revenue estimates is expected to be about 8%. I think they could potentially do more than 8%, but let's do bear case, 6%. Let's do base case, honestly, I think 10%. Bullish case, let's do 14% for Micron. Now for the future profit margin, this one's also going to be a little bit tough because of the over exaggeration or just their big decline in profitability. So let's just go back to the charts here, go down to the profit margin. As you can see, in the past, it was near 30%. So honestly, if they can get back near that, I think that's possible. But for the future profit margin, let's put in for the bear case, a profit margin. So in the past, it was at 30% almost. Right now, it's at almost 20. I think for the bear case, let's just do 25. In base case, I'm going to do actually 28. Bullish case, I think we get up to 31. Now for the bear case PE ratio, I think this company, if it grows 6%, I think it deserves about maybe a 14 or 15 PE ratio. Let's do 15. A company growing 10%, I believe, deserves about a 20. Let's do a 22 PE ratio. And now for the bull case growing 14%, let's do a 29 PE ratio. Now for the shares outstanding, like we said, they're barely buying back any shares. So with that being said, I think bear case, no matter what, they're going to be constant. Base case, let's say they buy back 0.5%. Bull case, let's say they buy back at 1%. With that being said, taking a look at my intrinsic value calculator, I honestly see that this company, Micron, could be a good buy today. As we can see here, for the bear case, I get a projected price of $153. So with that being said, you get a negative 1% return, but base case, I get almost a 14% return, as we can see here with my calculator. Bull case, I think you can make almost 30%, but I do think the bull case is pretty out of the question. I'm not saying it's not going to happen. Say AI really helps accelerate that growth, then I definitely see it could happen, then potentially. So target prices for a 10% annual return, I think, as we can see here, base case, anything under $192, I think if you believe the base case, you can make about 10%. So honestly, if you believe the base or bull cases here, if you think they can grow double digits and get back to that profitability that they were just a few years ago, I think Micron looks pretty good right now. So thank you guys for watching this video. Please subscribe, hit the like button, comment down below. Also, like I said, if you want to go over, click the link down in the description or in the pinned comment to take a look at this stock analysis platform that I created for valuation investing. All you have to do is click the link, join the membership. It's a 7-day free trial, so you can cancel it after that, won't be charged. And if you want to continue to use it, you'll get $8. It's only $8 per month. I think it's one of the cheapest stock analysis tools out there. And you can also use a portfolio tracker. Also take a look at the 7-step stocks, which would show you what are some good financial stocks. Also, like I said, the intrinsic value calculator, and you can take a look at all the financial data. So if you guys want to take a look at that, click the link in the description. And thank you guys for watching this video. Please subscribe. Thank you. See you.